Hello CMA students, welcome to my channel. If you're new here, please like, share, subscribe to our channel if it will be benefit for you for to clear this MA profession easily. So first things first, new to channel, please like, share, subscribe. Today I will bring you for you online exam MCQs with practical answers with solutions. Let's begin. What is the question number one? What is the tax liability of the income from subletting of house property? Subletting of house property is taxable under which heads? Yes, given here. So income taxable under the heads of capital gains, taxable under the heads of income from other sources. So taxable under the heads of income from house property exempted. So this is the question. What is the tax liability of income of subletting of house property? So how subletting of house property is given. So subliability is so if the building, let me explain here. If letting of only building is not possible or not acceptable to other party, if the sum of rent as not from property chargeable under business income or income from other sources which is composite segregable. So in letting out of hotel rooms and auditorium, etc. So simply we get, so para number, that is para we see here section letting out of income. What is the tax liability of subletting of house property? Income should be calculated. Income should be, this is the option we select here, and then save next. And we see here, and then save next, and then green light will be highlighted. So whenever what is the tax liability of income of subletting of income of house property is taxable under the heads of income from other sources. Okay, that's the first one. We select this one option and then save next. Here we see here save next, and we move into the next question number 2. An individual can avail benefit in respect of leave travel concession offered by his employer twice in a block of dash year in fill in the blanks. So leave travel concession by the employer. This employer will be how many years? So the option will be 4 calendar year. This is related to the salary income. So block period, we see the notes. Exemption is available in respect of 2 journeys performed in a block of 4 calendar years commencing from 1st January 1986. So block 2 journeys will be exempted. 2 journeys performed at 4 calendar years. So 4 calendar years. So the employer is exemption to twice to given by the employers to given by the employee. So block period, so exemption is available in respect of 2 journeys performed in a block of 4 calendar year commencing from so 1st January onwards. 1st January 1986, the block period will be amended. It will be, so academically the first assess for the assessment year 2021, the relevant back value is 4 years. So 4 years is the block twice in the block 4 years leave travel concession. So we choose the option here, this one, and then save next one, save next, and then we see select. After that we see the move into the third question. The additional or accelerated depreciation for any eligible assessee for a machinery installed and used after 31st March 2005 is dash percent of actual cost of machinery. So once again I read the question. Understand whenever you understand the questions, read repeatedly. So additional accelerated depreciation for any eligible assessee for a machinery installed using after 31st 31st March 2005 is what is the percentage we will what is the actual cost of the machinery. Fill in the blanks. We see the find the fill in the blanks. The additional accelerated depreciation for eligible assessee for the machinery installed and used for 31st March 2005 is dash percent for of the actual cost of machinery. Fill in the blanks. So here we see the options here. The additional or accelerated depreciation. So we see the additional accelerated depreciation dash percentage of we need 31st March to the additional accelerated depreciation additional depreciation section number 32. So 32 section number 32 1 2A 1 class 2A additional depreciation provide an assessee additional and accelerated depreciation for eligible assessee for machinery installed or used 31st 3 2005 is. So rate of depreciation will be categorized 20%. So 20% we choose here. So the special rate for additional depreciation in case of notified backward area. So the rate of additional depreciation actual cost is 20%. So here we mention 0.2. So 0.2 mean to divided by 100. So calculator 0.2 into 100. We got 20%. So 0.2 into 100 we got 20%. So 20% is the answer we see here. 32 1 2A class 2A subsection 1 and 32 subsection 1 class 2A. So class 2A we will here PG being profit and gains and business profession. So additional actual cost, that is 20%, 31st March 2005, a new plant and machinery other than following shipping costs, aircrafts, any plant or machinery which was used either within the outside India or by any other person before such install plant and machinery of installed office premises or any residential accommodation or guest house or office buildings, etc. 100% which is allowed 100% deduction. Otherwise, additional depreciation expense additional will be plant and machinery and not on other assets like furniture, building, etc. Rate of additional depreciation is 20% of actual cost of such plant and 20% of actual cost of. So here we can here directly given 0.2, so 0.2 here into multiply, that is we get 20%, that is 0.2. So how we can already get 20 by 100 we can also got 20%. So we got 0.2. So 0.2. So if you don't need to worry about the calculator, is here. Click the calculator. You see here, calculator will be open in the institute side. You need to calculate. We also bring your own calculator. So bring your own calculator like this. Bring your own calculator like this. It will be benefit for you to bring your examination hall. It will. This is the calculator like this. No, don't you allow. They don't allow the scientific calculator. Bring this Casio or Citizen calculator. It will be benefit for you. This type of calculator. This is the question number 3. The additional or accelerated depreciation for eligible assessee for mission installed. So mission installed used 31st 3 2005 is the actual dash percentage is 0.20%. So here we multiply divided by 10%. So we calculated 0, 20%, remember it. So percentage into converted into units. So 20% is the additional depreciation at 31st 3 March 2005. Actual cost of machinery is additional depreciation or accelerated depreciation for eligible assessee for machinery installed and used 31st 3 2005 is 20%. Remember it. And then choose this option. After that is save and next. Next fourth question. We see here fourth question. So whenever we tick the answer, the red light will be red color will be highlighted into green in the previous questions. Now we went to the fourth question. Which of the following is the taxable under the heads of salary? So family pension is not taxable. It is income from other sources. So next question number 4 we discussed now. Which of the following is taxable under the heads of salary? So salary is we choose the option. Family pension is not is taxable under the heads of income from other sources. So commission received for employee by director of a company, it will be taxable. So employers. So employee and director. Director's fees. So salary of received by member of state of legislature. So now to choose the commission received by employee, director of a company. So the employee of the company. So B is the answer. So B is the answer. Commission received by employee. Commission is received. Commission is received by an employee by director of a company is commission. Next. So commission will be received is taxable under the heads of salary received by member of legislative. So here we see the basic. A member of parliament of state legislature is not treated as an employee of the government. Payment received by them shall be taxable from income from other sources. This also wrong. So family pension is not covered on income from other sources. The next so B is the answer. Commission received by an employee, director of a company. So an employee commission is received by employee, director of a company. So it will be taxable under the heads of salary. That is option will be selected here. So fourth, whenever which of the following family pension is not covered. So family pension is received is taxable under the heads of income from other sources. Commission received by employer for director of the company, it will be taxable under the heads of. So put the option radio button, received taxable under the heads of income from salaries. So state legislative, it will be taxable under the heads of other sources. A member of parliament of state or other is not treated as an employee of the government. Payment of received shall be taxable under the heads of income from other sources. Okay. Next, and same procedure again, we click the save again. So whenever we select this option, others only with the green light will be activated here. Otherwise you can't be. Only save and then save. And then click the save button and then save. So this one option will be commission received. Which of the following is the taxable under the heads of salaries? Commission received by employee, director of the company. So director of the company, it will be taxable. Otherwise same shall be taxable from income from other sources. So B will be the answer. Salary received by the employee, member of the state and legislative. So it will be taxable under the income from other sources. Next we move into the fifth question. So, question number 5. Which of the following rate of depreciation applicable for the purpose of valuation of purchases being car sold by employer to employee as per the Income Tax Act? So I repeat the question again. Which of the following is the rate of depreciation applicable for the purpose of valuation of purchases for being car sold by an employee to employee? So is the car purchased as per the income. So this is related to the salary income as of the salary. Valuation of car purchasers. So what is the which of the following rate of depreciation available for the purpose of evaluation of purchases being car sold by employer to employee? So car is sold by employee to 40% is of optical person and 60% is in case of the case of personal purpose 60%. So here also the given the percentage here 0.1, that means 10 by 100, that is equal to 0.1, that is 10% will actual cost of depreciation will be charged for the valuation of purchasers. What are costs? Rule number 3 of 2. So rule number 3 of 2 will be taxable under the heads of income from salary. So this is the employer to employee as per the income tax act. So 10% actual cost of the car sold. Car is not owned by. So 10%, that is 0.1. And then same procedures, click the save and next. Next, move into the sixth question. Which of the following is not regarding as a capital gain or slump sale? Which of the following is the correct regarding capital gains or slump sale? Always short-term capital gain, always taxable, always long term, depends upon the period of holding of capital assets undertaking transfer. So 10% of actual cost for the tax for depreciation in the previous question. So now we went to the sixth question. Which of the following is the correct regarding capital gains of treatment of slump sale? So treatment of slump sale. So this is the question given here. Treatment of slump sale related to that topic here. Which of the following is which of the following is the correct regarding capital gains on slump sale? Always short-term capital gain not taxable. Always long-term capital gains. Dividends or depends upon period of holding capital gains undertaking the concepts. So what is the condition? We will show the. So what are the which of the following is the correct? We need to find out the correct options here. Which of the following is the correct regarding capital gains or slump sale? Treatment of slump sale. So capital gains in case of this is the 50B. So 50B regarding this 50B treatment of capital gains under in case of slump sale under section 50B. So what is the 50B says? Which of the following is correct regarding as the capital gains on slump sale? So what is slump sale? Slump sale means the transfer of one or more undertakings lump sum consideration without assigning values to the individual assets and liabilities in such sales. Undertaking shall include any part of any undertaking or unit or any division or undertaking business activity taken as whole, but does not include individual assets or liability or any combination of therefore constituting business activity. So always short-term capital gains. Always short-term capital gains are not taxable. Depends upon period of holding or a period of capital assets undertaking. So option will be which of the following is the correct regarding capital gains